Hello, everyone. Welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Mr. Pranay Mathur, who is the partner and CEO of RTAF, which is a VC firm based out of Jaipur. Hi, Pranay. Welcome to ELI.
Hi, Priyaranjan. Hi. Thank you so much for having me.
So to start with, I would request you to introduce yourself to our audience and introduce in a way that talk about your background, where you were born and brought up, how where did you study, and how did you land up in entrepreneurship in first place?
Great. Absolutely. Absolutely. So, about myself, I'm Pranay Mathur. I'm currently being the CEO and partner of Realtime Angel Fund, which is a SEBI registered Category 1 AIF. So, about my own personal background, I come from a very humble middle class background. No one in my family was an entrepreneur. So, I was the first generation entrepreneur. I built my first company in 2010 when I was like 25, 26 years old. But that and entrepreneur bug was always there during my schooling and my college time. I come from Jaipur, which is a tier two, so-called tier two city,
Hmm.
but we consider it as a tier one now
Not anymore.
because
Yeah.
not anymore. Correct. So successful startups like Car Dekho, Dealshare, and other startups are Razorpay founders started company from Jaipur. So it's a quite a good place to be. But back then in 2010, when I started and created my own technology company, then there was no startup ecosystem, right? So I built the bootstrap way. I made my wealth out of it. We have served customers like Red Bull, North America, Disney, Zynga, developed various technology and digital solutions for companies like Ernest & Young, Network 18, Apollo Pharmacy. So those are the kind of customers that I have served, and my expertise has been my expertise is that solve understanding a business problem, which relates to consumers or the business users, and transforming them that into a digital solution.
Mm-hmm.
So when I grew up, that's what I've been doing. During my school times, college times. So that was something I wanted to help and work with global companies. So that's what I did. After making a wealth out of this business, I said that why not start supporting other founders also,
Mm-hmm.
because that's something which I'm passionate about.
Mm-hmm.
So I started talking to various startup founders in Jaipur, hosted a couple events wherein invited various VCs from across India to Jaipur ecosystem. That's how I got connected to a India investor ecosystem as well. You
Mm-hmm.
know, so and it's been 5-6 years now since I'm angel investing into startups, helping entrepreneurs solve various problems in different areas. And yeah, so when I figure out that, okay, to really help these founders, I need to, one thing is very critical for all the founders is the funding part.
Mm-hmm. Yeah.
So founders know how to solve the problem, but most of the founders stuck because they don't have access to the early stage funding.
Mm-hmm.
So I thought that why not solve this problem for startup founders, and that's how I founded Real Time Angel Fund with my other partners and core partners, which are global CFOs on our partners table.
Gotcha.
Yeah.
Gotcha. So,
Yeah.
tell us one thing. When you speak of early stage, how early do you invest, and is there a difference between RTF and Shark Tank?
So it's like you can say we are not sharks. We really founder friendly people, right? Uh, so we when I talk about early stage startups, means somebody who has created a product, but now they want to really go to the next level of the product development, or they want to take product to to the larger level of customers, So it's not a seed or a pre-seed kind of a thing. You can say, a late seed or kind of a thing where we try to find out a problem which is being figured out, and then help founders to grow that kind of startup. That's where we invest, because pre-seed is a different kind of thing where incubators and other people get involved. We as an angel fund, we bring a strategic angel investor on a growth stage as well.
Okay. One more thing I'm curious. So when startups start, they think about building product, building customers, but funding is a different ball game altogether. That starts at a later stage. Then you start compiling balance sheet and other numerical stuff around a venture. So tell us one thing, what all documents and what all stats do you look at before investing in a venture? And do these ventures have ready-made stats in their hand when they come to you?
There's an interesting fact that, and we have seen that in our kind of startups in the last 9-10 months kind of journey that we have invested in, my 5-6 years of journey working with founders, raising funds, most of the projections gets changed even after raising 2-3 months after raising the funds itself, So the kind of projections that founders bring in, and the we evaluate, it is tend to be modified or change within next 3 to 6 months of time. But that's fine. That's usual, because the stage that we are in, the things are evolving fast in that startup. So the projection, the Excel sheets, the business projections, or the sales or revenue or cost projection that comes up mostly change within 3 to 6 months time. And that's fine. That's fine with us. But when we invest, we mostly look at founder's pedigree, like what is the background founder have, what is the problem that they are solving, is the problem could make a larger impact or not, right? What is the innovation which is happening, so we put our checks on these 3-4 things more than looking at the projections. It's always good to have that kind of thing, but just to check where what the founder is thinking, but we don't do a lot of emphasis on the Excel sheets and all those things, because it's a very early stage kind of thing. Even there are a lot of chances to keep evolving the business plan and all those things, and after funding 80% of the projections get changed.
So one more technical question around that. When you fund a startup, it is always in exchange of stakes. Some equity gets credited to you. So how do you decide on what is the ticket size versus what is the amount of equity in exchange of that? How does that calculation happen?
See, knowing the valuation of a startup at early stage, or you can say seed or post-seed stage, is very difficult. Either the startup has not raised the first round of funding itself, so identifying valuation is very difficult. So if we are leading the first round in any startup, then we tend to understand how big this startup is going to be and how much equity should remain with the founders to raise enough money in the subsequent rounds, But usually we don't go beyond 5 to 10% kind of equity dilution in the initial phase, right? We don't say, okay, we will take 15% or 20% just for 50 lakhs or 1 crore kind of thing, right? So we tend to support founders and say, okay, founders should have enough equity remain with them. They should not dilute a lot, so that they can raise more money in the subsequent round. If somebody has already raised investment earlier, then it is little easy for us to come up with a valuation, because they have already raised at certain valuation earlier. So then we can see what is the journey they have, or what is the goals they have achieved from last funding till date. And then based on that, we come up with a new valuation of the company. But we always make sure that the founder, is happy. We value the founders' equity. We don't want them to dilute for anything which, unlike sharks, as you mentioned, so we don't want them to dilute a lot. So we have a team of experts with us. My partners Amit ji, Manish ji, they have their own expertise because they have been investing in from 2014-15 in the startup ecosystem. So we have the kind of people who help founders come up with the right valuation methodology as well.
What's the typical ticket size? How much do you invest typically in the
So
startup?
our average ticket size is 1 crore INR. So you can say 125K dollars in every startup that we put in.
Got it. Okay,
Yeah.
let's say
And we are happy to also do certain follow-up rounds. So for a couple of our deals that we did about 5, 6, 7 months back, we have also done follow-up rounds for those startups as well.
more like top-ups.
Top-ups, correct.
Got it. Let's say one venture has raised fund from us, so they have taken money from us. What's the next round of engagement that happens with the startup? Is there some sort of mentoring and networking with the peers of the investor? Anything around that?
Absolutely, absolutely. I think angel investment is a strategic kind of investment, right? So unlike VC, so VC will put in money in the startup and they will keep asking you every 3 months, 6 months, or probably once a year that how are you doing? Send us an MIS, just an Excel sheet and all that stuff. They don't care what exactly you are doing in your startup, right? Some VCs have started doing it because of the red flags that they have seen, and the kind of returns that VCs have created. But we, as in Realtime Angel Fund, and the kind of thesis that we have, we closely work with founders in their growth journey. We do have a curated accelerator program, which is a highly personalized accelerator program called Seed Leap for founders, wherein we help them connect to our network of investors, business connects, global connects that they require to build or grow their company. Then we help them with identifying certain gaps in the business, like for example, right after funding from a micro VC or a VC, every startup requires a corporate strategy, right? How they should really, or corporate governance program. So we help founders identify those gaps in the company wherein they might be having certain challenges. So we help them and hold them through our accelerator program, help them bringing the business connect so that they can increase their revenue or sales. So we do strategic investments where we see that apart from money, we are bringing a strategic strength in that company so that we can grow that company to the next level. So yeah, I mean, we have those kind of people in our network because we are now about 400 plus odd investor network that have signed up with us in the fund, right? And we have done about 20 deals in the fund so far. So we have built a global network of experts, corporate high level corporate executives, through which we bring in those kind of strategic help to the startups.
Curious to know, how do you monitor the how how do you monitor the funds, how it is being utilized, and what happens if the founder is not acting in the best interest of the investor, like burning money, or investing in things that can be avoided, like taking a new office space. So how do you do that?
So as mentioned that we do understand. So before we invest, we spend about 8 to 12 weeks time with the founder. So it's like we date with the founder before we invest. It's not like that today you have come to me and tomorrow I'll give you the fund. So we understand founders' mindset, their way of working, how are they spending, what is the office they have currently, what is their projection, or what they want to do next with the fund. So we evaluate, and on both on the personal fronts, how the founders are as a personality, right, during this 8 to 12 weeks time. And we work with them to design the fund utilization plan as well, because as I mentioned that these are early stage companies, so they also need help in designing their fund utilization strategy. But see, in our portfolio so far, none of the founder has said something and have done something else, right, in terms of utilization of funds. But we make sure that we have a monthly call with every founder, know where they are going, what is the spend they are doing, and we also do a quarterly investors call with the founder and the investors who have invested in that startup, so that we know if how much money they have left in the bank, where they have utilized this money, what results have been caused by utilizing this money. So we keep those kind of conversation both on personal and professional terms, so that we know how what founder is going through and what company is going through. So it's like two things we are managing at the same time.
Got it.
So far, luckily, we have not seen any founders who have used the funds for something else which they have not, disclosed us. So that's a good for us so far.
Got it. Speaking of portfolio, can you tell us how many companies are there in our portfolio? What are some of the notable names that have done well after your investments? What's the total funds disbursed, and who are some of the notable investors who have invested in your fund?
Absolutely. So a couple of companies we are very proud of, and we just this month and last month we hosted our investors calls also with our companies. So the first investment we did was in MyMandi, which is a B2B marketplace for cart pushers. So they help thelawalas to in their vegetable buying, and they supply the vegetable to these thelawalas on their doorstep. Right? They every month they help about 1,000 thelawalas and empower them through MyMandi system. So we that was our first investment in September. In right after our investment, they raised fund from Mr. Ratan Tata, right? So Mr. Ratan Tata invested in that company, and they were just in one city at that point of time. Now they are in 4 cities. In the last 6-7 months, they have grown to 4 cities. And good growth pattern they have shown in the last 6 months. They have recently closed a good round. I mean, like a 2x round of what they raised earlier, right, in the last 7 months. So that is really going good. We are proud of that. The founders, Suryansh and Ariman, both are really good founders, and we really enjoy working with them. And another one is Capital Setu, which is about supply chain. They are solving supply chain financing problem for small and medium-sized businesses, right? So we invested in them in end of March, and in the same round through us, Mr. Rajat Mehta, who is chairman of Jito Incubation and Jito Angels, participated in that deal. Then Mr. Ashish Kacholia, who is a equity market small cap king, who invested in that startup along with us. And there are other marquee investors who got onboarded through us, and then also on the cap table of Capital Setu. So that's one fintech startup that we invested in. Another very revolutionary startup, which is Lark AI, which is solving the problem of they have created portable ECG machines for physicians in tier 2, tier 3, tier 4 cities. So unlike what GE and Philips sell for 1.5 lakh kind of a machines for ECG, they have created a portable ECG machine in the cost of 25,000 or 30,000 rupees. And their mission is to help these physicians earn more, as well as the people who live in village and remote areas who don't have access to immediate diagnosis of any cardiac related concern or issue. So with this machine, they can get early detection of any cardiac problem, right? So they are solving this big problem. They have been recognized by UK embassy. The founders went to UK and they have got grants from the UK government also. They have been recognized in Dubai and Abu Dhabi government as well. So these are the three notable startups that we have, and there are some other good startups that we have in our portfolio. Some notable names that I would talk about, even our own general partners in our fund, are Mr. Anuj Maheshwari, who is the group CFO of Kanmo Group, which is Indonesia's largest retail group. He's our general partner and investor in the fund. We have recently onboarded Mr. Anil Malhotra, who is CEO of H&M in Indonesia as well, right? These are Mr. Sukhbir Singh, who is a well-known celebrity and singer, who is our very special investor, and he keeps investing in our startups. So we have similar. Sorry, I cannot disclose everybody's name. These are the names that I can disclose, but there are some marquee in top level corporate executives who have onboarded with us, in the fund, and they are actively participating in the deals that we bring to them.
Almost up with the time. Just one last question I have, and this is thinking from a founder's point of view. So many of our listeners do reach out to me asking how one thing they cannot figure out is how do they raise funds, and there is no crash course for it. So founders are always busy solving their startups problem. They just don't get any time to understand how the funding works, how to raise fund until the time when they badly need the funding. So can you tell us in a very brief way how should a founder be prepared for funding, if at all there is a plan for funding?
Absolutely. So see, the founders should first raise money. They have an idea, because everything starts with an idea, right? So founders should either use their little bit of their savings plus to build a prototype or something. Either, if they don't have that money also, they should reach out to certain incubators for grants and all. There are a lot of access to the incubators now. And then once they have done some kind of prototype, then they should convince the people around them. The best backers, the first backers for a founder should be the people around them, like friends, family. So they should first raise money from them if they are convinced that, yes, I can really make it big, and on that conviction, the friends and family round should be done. Once the friends and family round is done, then the founder should look for external funding from strategic angel investors or micro VCs or VCs or other options that they have in place. But it is very important that the founders should not dilute a lot of money initially. So they try to solve problem being frugal to start with, because if you will dilute, let's say 20% for just 1 crore, doesn't make any sense, right? So it is very, very important that founders should value their equity and only raise money with the external investors when they really need it for the growth, right? Else they should first build the product, prototype it from grants, from friends and family, or known angels they know in their network. They should raise from the angels, and then they should go to micro VCs and things like that. So we, as an strategic angel investors, welcome all the founders to bring their seed stage ideas to us. If they have build the product, they have built a little bit of traction, then we are here to support them and even bring the kind of angel investors which can help them grow to the next level. I think because this is at a early stage, every founder needs that kind of support. So yeah, I mean, founders should try to first raise from the family, angel investors, and then go to the micro VC. That's the route of raising the fund.
Cannot raise from family and friends, if they do not back you, then you shouldn't probably approach a stranger or a VC, right? Well,
Exactly. If your people are not believing in your idea, how strangers or somebody who don't know you will believe in you? You know.
correct. On this note, we will close the session. Thanks for joining us, Pranay, and I would say my pleasure having on a platform, and our best wishes for RTAF.
Thank you, Priya, Ranjan. Thank you. It was a nice conversation with you.